Welcome all to our annual general meeting. Welcoming our accountant, Mazia Umairah binti Muhammad Suhaimi, our financial manager, Ahmad Zahid bin Iwan, and not to forget a representative from bank, Muhammad Adam Afiq bin Rohaim K. Before I start, I would like for Mr. Adam to know a little bit about our company. AEON is a retail holding company. AEON Malaysia operates a general merchandise store chain across Malaysia. Groceries, apparel, home items, electronic and other stuff are available from the company. The AEON group of company is a comprehensive Japanese retailer with operation in China and throughout Asia. Regardless of the market, AEON activity are always guided by its unchanging customer first policy. It aims to go above and beyond expectation and make customers pleased every time they buy by combining excellent merchandise with distinctive personal service that enrich the shopping experience. Alright, so the main reason for this meeting is to discuss about our project and to apply loan from your bank, Mr. Adam. So, AEON is planning on buying general merchandise store. There are one type of financial planning for this project. Firstly, the short-term financing. For this option, the company needs an additional fund of 1.5 million to finance its short-term project in 9 months.
Alright, thank you, Mr. Iman. Hello, everyone.
Hello.
Before complaining about the project idea, let me introduce myself as the bank representative for AEON CO Berhad. Work projects are very interesting and provide many benefits to the society. But before that, can I see the company financial position?
Of course you can. Mr. Amar, can you please show our financial position?
Wait a second. Okay, as an accountant of CO Berhad, this is the final position that I have calculated. Let me explain the leverage ratio for this company. Debt ratio in 2022 is 66.70% and in 2021 is 70.27%. The ratio for 2022 is better than the year 2021 because in that year shows that the company is subjected to lower risk of bankruptcy. Debt to equity ratio in 2022 is 94.03%, while in 2021 is 129.6%. Time interest earned is in 2022 is 2.82 times in 2021 and is 2.04 times. The ratio for the year 2022 is better than the year 2021 because it shows that the company has the ability to pay interest charged on loan.
Okay, thank you, Mr. Amar, for the explanation. I noticed that leverage ratio gives an induction of AEON CO Berhad effectiveness in financing decision and measure the firm propensity to use debt in financing its assets and its financial risk. Okay. As what has been recorded and discussed here by the accountant, AEON CO Berhad debt ratio in 2022 is lower compared to 2021. I can see that the value of debt ratio is quite low and not risky. It shows that the company is subjected to lower risk of bankruptcy. Same goes to time interest earned that shows the company have the ability to pay interest charged on loan. This is too good for AEON CO Berhad to have this kind of value. To have a stable financial position, AEON CO Berhad should have a lower debt ratio and higher interest earned. Based on what has been called just now, we can see that this company indicates high net profit margin in 2022 compared to the year 2021. Okay. This means that the return is quite high, which has positively affected the growth prospect. Sorry. Am I correct?
Yes.
It also reveals that this company ratio of total asset is higher than the year before, which means that the productivity of assets in producing profit is significant and perfect in terms of the ability of this company to control costs in this operation. So how can you maintain profits even though the situation like COVID come to hit?
Alright, as a testament of AEON's continuous effort to digitalization and improve our customer experience via the introduction of personal shopper, drive to service and my AEON to go to offer a safe shopping experience.
Okay then, well done for maintaining your company profits. So which alternative will you choose for the project to finance it?
Alright, so our financial manager will explain further on this matter.
Okay, thank you Mr. Aiman for this effective company. So without wasting time, I will proceed to discuss which alternative should our company choose to make a loan. For an alternative one, in the short term, our company can borrow the money from Maybank because they will charge us 9% in annual interest, and the loan is discounted, but this bank requires a 15% compensating balance. In the bank, the company has a current account balance of 10,000. So for effective interest rates, EIR, company will get 17.36%. So, however, I think there is another option that can be used in short-term projects is to issue some commercial papers. Each commercial papers is worth 15,000 at a rate of 5% per annum. Production cost amount to 2,500 for each commercial paper. After calculating the interest paid is as much as 56,250. There are 30 papers that will be issued and the cost amounts to 75,000, and the effective interest rate is 11.50%. So, I think there is another suggestion. We can use Amar Trade Credit to make a loan with the following terms: 5-day 5/10 net 50. The approximate annual percentage cost of not taking discount is 38.61%. Okay, after my analysis, there is another method that can be used with a situation where 1.7 million total credit and 5% commitment fee is charged on unused funds. In addition, the interest rate is 5.5%. The result of the calculation found that the interest incurred was 41,250, while the total community fee to be paid was 10,000. Effective interest rates of 6.83%. However, when analysis among all the suggested alternatives, I think alternative one suggested by Mr. Aiman is more appropriate because it was the lowest interest rate among all the alternatives.
Okay, I don't agree with you in choosing alternative 1. I think alternative 4 is better because it has the lowest interest rate.
After seeing all the alternatives, actually, I do agree with the decision to apply for the loans, so I can suggest you some local bank because I believe that this company is still stable enough in terms of profits and the return of this company. Applying for loans might generate a lot of the profits in the future. Your debt ratio is lower and your term interest earned is high.
Alright, considering the ratio presented earlier is not worrying, I think I should take your advice, Mr. Adam. Applying for loans might generate more profit in the future. Therefore, we should take a loan because our company is ready. So, thank you all for participating in this meeting. Your question is truly appreciated. Mr. Adam, hope we will see each other in future.
You're welcome and farewell everyone.
Thank you, Mr. Adam.